Mark Leonard is one of the greatest capital allocators on the planet, but few people have even heard of him. The Canadian billionaire refuses to talk to the media, and only 3 pictures of him can be found online. If anyone ever tries to upload anything about him, he will instantly have it deleted. Why? Because Mark wants his numbers to do the talking. And talking they are. The ultra-secretive billionaire who looks like a real-life Gandalf has quietly built a $40 billion empire while conquering the world of enterprise software. Mark founded Constellation Software in 1995 at age 39 and has since its IPO in 2006 compounded the company's share price at 34% annually. That's a solid 130x. Anyone who's ever tried their hand at investing knows how incredibly difficult that is. But Mark Leonard's journey to build one of the world's most impressive compounding machines has been far from conventional, which is also why I love his story. It took him 7 years to graduate college, and he took on some weird jobs early in his career, including working as a gravedigger, a stonemason, a bouncer, and a dog handler. Who said there's only one path to the top? Mark eventually went to B school at the University of Western Ontario and landed an internship at Barclays. But while at Barclays, Mark's mentor told him, "Look, Mark, you're going to make a terrible banker," and suggested that he explore other opportunities instead. This led Mark to the world of venture capital, but he quickly discovered flaws in the VC investing model. He disliked the inconsistent returns, found it difficult to become a subject matter expert on a specific industry, and realized that VCs only build companies with a goal to sell them to someone else. Mark, on the other hand, wanted to invest in companies that he could own forever. Since 1995, Mark Leonard has acquired over 500 businesses, and he's only ever sold one, something he regrets to this day. This guy is clearly unique, and he's worth paying attention to. I'm obsessed with people who have figured out a way to build wealth in a consistent and reliable way. Mark Leonard reminds me of an alternate universe Warren Buffett, so I decided to read everything I possibly could about him, including every shareholder letter he's written since 2007. In this video, I'll share what I learned. Our preference is to acquire businesses in their entirety and to own them forever. Occasionally, we have the opportunity to buy a piece of a good business with the prospect of eventually acquiring the rest. That's a quote from Mark Leonard's 2007 shareholder letter, and what Mark wrote back then hasn't changed in the ensuing 16 years. Constellation's goal is to buy a 100% stake in attractive vertical market software businesses with a goal to never sell them. VMS companies are highly customized to serve the needs of a very niche industry. Let's say you own a tennis club, for example. In order to run a successful club, you need software to help you manage things like court bookings, create membership plans, rent tennis rackets, schedule classes with a coach, etc. You could probably use a general booking software and point-of-sale system like Square or iSettle to do this, but these solutions aren't going to be customized for the exact needs your tennis club has. And so many industry verticals, whether it's tennis clubs, home builders, or HR firms, they all need software solutions that are tailored to their specific industry. These are the software companies that Mark Leonard and Constellation goes out to buy. Constellation Software currently owns businesses that serve more than 100 verticals, of which transit and healthcare are 2 of the largest. So why did Mark Leonard decide to target VMS specifically? Here's what he writes in his 2011 shareholder letter. "We lost only 4% of our customers in 2010, a number that has been remarkably consistent over the last 5 years. Some of these customers we lost to bankruptcies or acquisitions, others to competitors. No matter how you look at it, our customers stay with us for a very long time, suggesting both the high switching costs and the real customer loyalty benefits that are inherent in our businesses." This is a super valuable nugget. What Mark is saying here is that VMS businesses have an incredibly low churn. They only lost 4% of their customers in 2010, which implies a 96% customer retention rate. That's really good, especially if you consider the timing of when he wrote this. It was during the aftermath of the 2008 financial crisis, and despite the global economic turmoil at that time, Constellation's customers didn't cancel their software contracts. This is of course because Constellation's businesses are adding real value to its customers, but more importantly, the high switching costs associated with VMS businesses is a key factor that makes them so attractive. Once your tennis club is up and running and you've selected a software to run it with, you're unlikely to switch to a different software provider. The cost of switching is too high. It's a pain in the ass to migrate all your data from one system to another and to train your staff on how to use the new program. It gets even harder if you're running multiple tennis clubs. It's easy for inertia to kick in here, even if a competitor's software is better than your current one. This makes VMS businesses very sticky, and it gives them a lot of pricing power. At the same time, because these businesses serve highly niche verticals, there's going to be less competition. This is where a big part of Mark Leonard's genius really shines. He figured this out very early on, in the mid-90s when software had barely started eating the world. There are a few other PE firms who figured this out too though, such as Vista Equity Partners. Similar to Constellation, they realized how attractive the enterprise software business model really was and started building a portfolio of similar companies. But there's a key difference though. Traditional PE firms usually have an investment horizon of 5 to 7 years, after which they tend to divest their assets to find new ones. Mark Leonard's holding period is forever. Here's what Mark Leonard writes in his 2010 letter. "We have been a serial acquirer of inherently attractive small vertical market software businesses in a large number of different verticals. We try to be competent, long-term oriented owners of these businesses. In the vast majority of cases, the longer we have owned a small software business, the larger and better it has become. If we persist in this strategy, let's call it the many vertical strategy, we will continue to add new verticals and to make many more small acquisitions each year." You and I talk a lot about the power of compounding on this channel, so I'm sure you realize how genius this is. Constellation Software's investment horizon allows Mark to compound returns from these highly attractive software businesses in perpetuity. That's incredibly powerful. Constellation raked in $6.6 billion in revenue in 2022. That's up from $210 million in 2006 and reflects a 24% CAGR. Not bad, especially given that 70% of its revenues are recurring. However, a big chunk of Constellation's top-line growth is of course acquisitive, and the company's organic growth is low single digits per year. That's not overly impressive, and it's primarily because the businesses that Constellation acquires tends to have a dominant position in a vertical, which makes acquiring additional customers difficult. Market saturation is a real thing. Let's take a quick breather here. I know I've been throwing out a lot of numbers. What Mark Leonard has done is build a cash flow generating machine. For anyone looking to build a reliable path to wealth, this seems like an excellent strategy. By acquiring small established VMS businesses, provide them with ongoing support, and improve them over time, Mark has been able to compound their cash flows and use those cash flows to acquire even more businesses. Constellation generated $853 million in free cash flow in 2022, and it doesn't seem like they'll ever stop printing money. Now, this sounds great and all, but finding the right businesses to acquire isn't necessarily easy. How does Mark actually decide which companies to acquire? Mark Leonard is fundamentally a value investor, again, not unlike Warren Buffett. Constellation's acquisitions are small, typically 2 to 4 million in enterprise value, and they often pay a 1 to 2x revenue multiple. Mark has a strong preference for founder-led companies. He writes, "Our favorite and most frequent acquisitions are the businesses that we buy from founders. When a founder invests the better part of a lifetime building a business, a long-term orientation tends to permeate all aspects of the enterprise: employee selection and development, establishing and building symbiotic customer relationships, and evolving sophisticated product suites. Founder businesses tend to be a very good cultural fit with CSI, and most of the ones that we buy operate as standalone business units managed by their existing managers under the CSI umbrella. So once Mark has acquired founder-led businesses, he leaves them alone and lets them do their thing. This form of decentralized governance is an important aspect in how Constellation is structured and run. Growing up, Mark Leonard hated being told what to do and how to think. He challenged teachers, moved out of his parents' home at an early age, and even built a flamethrower. This disdain for authority is a key factor why his managers are given significant autonomy. Constellation, as a parent company, limits itself to the role of coach and mentor. Again, this reminds me of how Buffett and Munger run Berkshire. Ambitious people don't want to be bossed around and told what to do. If they're smart, they'll know how to act as long as incentives are aligned. In his 2008 shareholder letter, Mark writes, "Constellation's objective is to be a perpetual owner of inherently attractive software businesses. Part of a perpetual owner's job is to make sure that energetic, intelligent, and ethical general managers are running their businesses and that the GMs are incented to enhance shareholder value over the very long term. It is trivial for an experienced GM to run a software company to generate high profitability and shrinking revenues. Far more challenging is generating reasonable short-term profits while continuing to grow revenues in an industry where investment cycles often exceed 10 years. Understanding a GM's performance as they make these long-term trade-offs is the most difficult part of a perpetual owner's job." So how does Mark Leonard ensure that his managers' incentives are aligned with Constellation's long-term holding period? His approach to compensation is pretty unique. You see, Constellation doesn't issue any equity to its managers or employees. Why? Because they don't want to dilute existing shareholders. Instead, they pay cash bonuses to their employees and require that a significant portion of that bonus, often 75% or more, is used to buy common shares on the open market. Those shares are then held in escrow for an average of 4 years, which prevents employees from selling. Over time, Constellation's stock price will typically increase, which means that once the 4-year escrow period has passed, employees will have unrealized gains. If they sell now, they'll have to pay capital gains tax, right? So most people decide to hold on to their shares, which in turn makes them long-term shareholders in the company. Mark Leonard doesn't even pay himself a salary or bonus. He owns 7% of Constellation's outstanding shares, and the only way he'll get paid is by boosting the company's equity value. It's a fascinating approach to compensation, and it truly aligns incentives across the company, all the way from shareholders, board members, executives, and employees. Mark Leonard is nothing short of impressive. He's built Constellation into money printer with that deep moat. By owning hundreds of VMS businesses, Constellation has an incredible amount of data and knowledge of what works and what doesn't. And by taking good care of their founders and the businesses that they're acquiring, they've positioned themselves as a buyer of choice for many. A potential threat to Constellation's business model is the fact that it's much easier to launch a SaaS business today than it was 10 years ago. The advent of cloud computing has brought production costs way down, but the high switching costs, of course, still remain. So this is a good reminder to create products with high switching costs. I'll be paying close attention to Mark Leonard and Constellation Software as I build my own ventures. His secretive nature is somewhat unfortunate. It robs an entire generation of business builders from his knowledge, but I did my best to compile some of his lessons here, and I hope you found it useful. If you did, hit that subscribe button, and I'll see you in the next video. Bye!